So let's start with this notion that the times are difficult, you have to conserve and grow, or you're going to be in trouble. Obviously, some of it is sentiment, some of it is real. From just where you sit, and it feels like, at least based on social media, there are a lot of startups that reach out to you personally as well, and want your advice, presumably want your money. I'm curious about how do you go about kind of engaging with them. So if an entrepreneur in the crowd here reaches out and says, I have this great idea, what are the filters that you will use, particularly in a time like this?
Okay, so first of all, there are a lot of my peer group which have got a lot of time now on their hands so that they can do a lot of investments. But at last, in our case, it is a little tough. I don't get time to do the reviews with my own teams, as many I wished I could have. So it's very tough for me to sincerely devote time to every request, and that's a little bit of challenge because of the times these we are playing in. But the best way that I've seen that it works out is that people should be simplifiedly precise. I think I, one point of time, used to think, what's a dumb thing called elevator pitch, one slide pitch, and so on. But lately I've learned that if you can be precise and very, very few words to say or think, you're saying correct thing. And otherwise, people start rattling many things. So the first and foremost thing that I prefer to see when somebody is pinging me, what is they talking? And are they talking in a fewer words or many words? And I have a belief that if people can say things in lesser words, they have a far more clarity. And if they're saying it many words, they're trying to roam around. And maybe it is a communication issue, not the idea issue, by the way, but there is so less for me to deeper down there. Secondly, there's a little bit, as a company also, we do investments. And so there is a team in our office which helps me. So they go through otherwise those pitches. One of the problems that we go through is that there are companies which are built because there is another company that has got built. And I think that's a little bit of chicken and egg in a sense that you didn't have that idea before. So companies get made based on a feature. And like, this is a photo upload, and I'm a photo upload with a filter. Okay, I get it. But once the photo upload with a filter comes out, the photo upload guy who has a market share will also build photo upload with a filter.
So you're not a big fan of fast followers?
I think I'm a fan of entrepreneurs who build companies, not their literally ideas, but incredible entrepreneurs inevitably take a larger problem at statement, even if it looks very small statement disguised in fewer words. For example, like let's imagine Sachin Bansal, 2008, saying, I want to build an online commerce company. That's a very small line, but it's a very powerful line to say. Like I went to them board and I said, I want to build a payment company for this country. And that's a small line, but it has a lot of depth inside it. And when people talk about what they want to build, I think people are not necessarily sincere because this is more or less a fashion statement that they get in. I have a lot of respect for entrepreneurs who build trends. 2011, 12, when we started Paytm, and 13 when we got licensed, we were 33rd company to get a Paytm license from RBI. In other words, more or less significant number of companies were there, but there was not a significant leap in the usage of what payment systems were being built. Many factors, many headwinds and tailwinds supporting, we ended up creating a significant leap of consumer base and merchant base using it. Now it seems like, literally like some days back it was smartphone, and now everybody is launching a wallet. I'm surprised VCCircle has not launched by now. So
we use Paytm and others.
All right, that's cool. Now, I think if investors are lucky and entrepreneurs who can support these entrepreneurs who are going to build new companies are lucky, are those who don't build on a pattern. They build because they see a larger problem, and I think that's a very tough thing to do, to discover and take up also. Like Bhavish building Ola is not because that there are 3 other taxi companies, I want to build 4th other. There is a natural progression to the story that I was building an Ola Travel, and then I've thought that how about building a cross-city taxi and then local taxi. There is a linear theory behind it. Inevitably, incredible companies are built out of self-need of entrepreneurs, then out of a pattern that they see and they recreate it.
One of the dangers or one of the challenges to that, though, is that then you're looking for people who are coming up with new models, right, or new spaces. Is there a fear that, let's say, I don't know, food technology, obviously a lot of companies got into trouble, but somebody might have a really good idea in that space, but the sector is a little kind of not being funded.
Correct.
By this token, that person would naturally build on other people's kind of previous efforts.
Inevitably, success is built on shoulders of giants. And some of those giants might not be very popularly known successful people. Like Macintosh having a GUI was not because Macintosh was first to get a GUI. It had people who had attempted GUI. The way it got presented was similarly Google, similarly Facebook, similarly Paytm. We are 33rd. We're not first to get this going. But I think the element here is not about being original with the idea literally. It is about why are you doing it and what's the motivation behind it. In the conversation, it comes out very easily. Because there is dash, 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 I'm building dash, dash, dash with 2 extra features, it'll be superior. Okay.
So anybody who comes to you and says, I am the Uber for X, chances are that you will push back a bit.
No, that's also the way of pitching actually. So for example, like I'm a Uber of food delivery for, let's say, Swiggy is a great pitch, any which way is day one. So the point is, why do you want to do this? Oh, I came, you talk to Harsha and then you figure out, this guy's not going to give up, man. I think the most important thing that anybody as a support or as an investment would look at is, who is this person? Will he give up in the situation or is it because it's a fair weather friend? I think that's the critical factor. It is not about that your idea is a replica of a global idea. Idea is generated out of some other parallel idea. Those are less factors. Even if it was filtered photo sharing, it ended up becoming Instagram.
Right.
You know, so the very fact that I started with that it's a feature, but it's the damn feature with the rest of the thing, because people are able to articulate their vivid imagination of incredible views. Somebody says building castles in the air, and somebody says vivid views. I think that's the deciphering movement. In today's day, somebody coming with that will say, this is building castles in the air. But the truth of the matter is, some of those guys who are building companies today will be far more successful than those who built in the heydays.
And has the tightening of the funding meant that the kind of metrics that you would care about at the beginning rather than later, has that changed? In the earlier panel, there was talk about, if you focus on vanity metrics, chances are that you may probably not get funded this time around. Do you want people to kind of come and talk about like different metrics than the usual conventional, let's get the audience and then figure out money later?
I built this company in 2001. This company, which is called Paytm today, it started as 197, and it is 197 Communications. And I never got money till 2007. So a lot of discussions that we heard that you have to build your business based on what cash flow can happen and so on. One thing I know, by the way, this is an overall Indian investment scenario. First of all, it's a cycle, so I'm not judging the people who are at the tail end of investment, which is called VC. There is a LP, there is a India's macro, so there are many reasons behind it. And I'm going to say this, traditionally, Series A Indian VCs have been far less risk takers than they should be. That's a statement, and I think it has got better in terms of that they are taking superior risk, but it has not changed. I want to tell you all an incredible story for a company which is, so this company had the business model like we talked about, cash flow positive business model. Typically, 18 million was raised in equity and 30 million was cash in bank. And there was an idea that I wanted to build a payment system. You know which company I'm talking about right now. My board denied to give me $1 million of investment to build Paytm. And I mean it, sincerely on the table. And not because they were not well-wisher of the company. Truest factor was they were the well-wisher and the board ecos that I was hearing a while back, they were those. I was their enough nice darling also, except that they said, Vijay, you are a good technology guy, this is a consumer business, you have to build a brand, you have to build market share, and you're talking about some business model which we are not even sure of this country will have. Now, what you're seeing here is a mindset with which we've come back. This is a company which has cash in bank, giving $1 million in that year, we had done 7 investments more than $1 million worth, and we had exited enough to get that all money back. So it was a very interesting statement to say, get a no. And I had to take a sort of a strong stand that I'm going to prefer to do this and so on. What I'm trying to talk in this scenario is that Indian VCs have not taken risks. But truest entrepreneurs have found ways to do it.
Does that also...
It doesn't mean that, so how did I fund my company in early days? I used to go give a one-day lesson on internet, fix up email address for someone, sell web hosting, 5,000 rupees a day. My price was 1,000 rupees an hour availability for a solution of a problem and those kind of things. I was meeting my ends meet. And that gave me worth to this business, which became sustainable and growing, called 197, which later on had 30 million cash in bank. And then also I had to earn the next 1 million to start the Paytm in the same company that I was founder for.
So one side of it is enterprising entrepreneurs looking for ways to find money. The other side is there's some data that angels continue to still want to fund. There seems to be startup level, there seems to be funding. In the earlier panel, there was talk about how the seed startup funding is large enough that you may survive till you get to,
True.
and then you obviously looked around and went to Alibaba, right? It's a talk about that scenario where there is money, just that it's in different places, and how do you go after that?
Okay, so this is a really, really interesting one. And I remember 2007-8 in Thai conference talking about the problem of this country was there were no angel investors in those days. Let's just remember, it's like, you're not Delhi guy, but some of us are from Delhi. So when Outer Ring Road will build flyovers, the next place where there is no flyover will be the Choco Block. Because people will take highways, literally flyover, and then that is a block area. So in the end, we have to have a full cycle, starting from angel investment, seed investment, Series A, Series B, Series C, large check, and then exits, and then IPOs, then M&A. Exits can't be of only one kind. Exits has to be of multiple kinds. What changed in last 3 years in this country is that we truly have full cycle. We've had exits which are plus 100 million. We just don't have IPOs which are so successful, except we Just Dial and I think Make My Trip are the 2 IPOs, but not enough IPOs. Except that particular tag, there is everything where even people who can write 100 million check are writing. Now, when you look at a large check, like in this context we're talking, ultimately technology is a front-loaded investment. Talk about Google, talk about Facebook, talk about anything else. In the end, consumer technologies are front-loaded cost of customer acquisition. Anybody can say everything of unit economics. You have to find unit economics of your company's cost, and it is low cost of building. I think the WhatsApp is a very low-cost business model. It was built on a really low number of people, and it was cheaper than building in Bangalore, as we know now. But there was a cost of customer acquisition in that. They solved it innovatively by bundling with devices and taking it as a cost from device maker. So when you look at the large checks now, you do not find traditionally large VCs like in US are. In US, who writes 100 million check? Goldman, Silver Lake, or someone else who is more or less nearly a public market fund and has an edge towards or one leg in the public market to play with. For India, there is no public market, literally. I mean, this is so small, liquid market anyways. And this company, which is exotically structured to be listed as a Singaporean company which can go, now there is a lot less attention to this overall picture. So India didn't get large sovereign funds or, I'd say, market funds to put money as fast as the other Asian conglomerates understood that India will be a bigger market. I think everybody in the US understands. Google understands India is a big market. Apple now understands today morning newspaper says India is a market. But it takes a Alibaba or a SoftBank or a Tencent to understand faster that India is going to be a market. So they came with checks. And I think India is the rarest country in the world map where we have insignificant number of Asian capital influencing valuations and the pricing and the company's growth than traditionally European or US capital is.
Do you consider yourself, you're not usually mentioned when people talk about the angels in India, but do you consider yourself an angel investor? You've done some quietly.
37 angel investments.
But it's usually they talk about the Nandans and,
They're meant to be.
What criteria do you use? What sectors are you kind of putting your own money down right now?
Yeah. So somewhere, I think, like I mentioned a while back, large, audacious goals and entrepreneurs who are chasing them is an incredible bet. A friend of mine, ClearTax, was building tax filing for India. Now, it doesn't come out because Intuit is too sexy and it's entering India and there is a clear tax app or tax filing app, but I have a lot of respect for people who want to build some foundation building ecosystems. So there is a layer of investments which I have a lot of respect of, and I would put any amount of money even if my cash flow doesn't suggest. But then there is another kind of money that I give to entrepreneurs who otherwise are not getting money, but they are really cool.
So you're the angel of the last resort.
Nearly. I actually get the most of the time those people who otherwise have not got or are getting in the early round also, I get to meet them too. But I do get meet to people who have otherwise not. And there was an interesting one. There was a gentleman, he was building an app which was AI app a couple of years back, and it was tracking you and telling you, the pitch was that if Hangover movie would have happened, you could have used smartphone to track where were you. That was a small pitch. Now, for me, in 2011-12, it was a nice understanding that smartphones will become massive data capturer. Companies which will know what to do with their data and capture data will be powerful. So this decision, so what was happening in this decision was that there is a person who is again finding out where this linear trend is going to go towards. So classic trending is that you have a platform and then on top of it is a use case or platform, then use case becomes a platform, then the platform. Classic, we know browser was a platform, then Facebook is a platform, then Messenger is a platform, those sequencing. So today, anybody building what is happening in the Messenger is a correct angel investment cycle. And that is why the bots have come. Today, anybody building what ton of data is generating is this. So a lot of data analytics and use case of data analytics is AI, so is a correct cycle. Tomorrow, somebody who will be building platform will be that I'm a bot and what data source I source and what services I do is going to be hot. So it's a, I think, continuous journey. Interestingly, India and Bangalore now has people who are literally on the cutting edge, and that's the fun about it. And I don't think that I invest at all for financial returns. It's only to make sure that these entrepreneurs who otherwise are doing cool things, and if my cash flow allows, why not?
So that was going to be my next question. 37 investments over a few years. You write a check, obviously. Do you have the time to really kind of help them, or in some cases you don't need to do that?
I actually don't need to write a check to help an entrepreneur. I've always told everyone that even if there is no check, if there is a help that I can do, it will not be because there is a check. And when we have written some money, it doesn't mean there is a extra help that I would do or less help I'll do. As an organization and as an individual, we have a help available for companies to build. We have a company, so our Bangalore...
You give space and you have...
I was going to say that Bangalore and Bombay offices have produced about 45 companies which we do not have equity, and they were working out of our office and building the company in the early days. Some of those companies start to compete with us surprisingly later. But that's the fun of building the ecosystem is. So I think when you say time to help support, I think rest of the organization and me as individual, so I try spending time like going to the airport or traveling in that city one day that is possible, as much possible. So those sort of things I do.
So there's been a lot of focus here about kind of raising money, obviously. You want to have some water? But there's also an element of like having enough money and the existing model not really working and clearly not going to be able to raise more money.
Pivot.
Classic pivot, right? Talk about what advice would you give? We have seen a couple in the last few weeks, especially in the kind of the delivery food space.
Yeah.
What would you advise people who have a runway of 6 months or a year's money, had hoped to raise based on the existing model? That's not going to happen.
Yeah.
How do you go about both conserving and growing them?
Yeah, so I think, first of all, investors should not invest in the business model as much should they tilt towards the founder and his team. Because whether the food delivery will work or not, whether the logistics in future will work or not for PepperTap is not the question. You should take a bet on the founder, that this is the founder, and that is what my classic context of invest in the driver, not the bus, and the destination, because what will happen on the way will change. So my early stage investors, and this is a very interesting sharing or anecdote that I can do this. There's an investor who sold equity in Paytm, stroke 197, 15 days before Alibaba round was announced. And he was concerned about the money that we were spending, exactly the conversation we were doing here. Now, my theory is that if they would have invested on an individual, not a business model, they would have stayed. And the guy who bought was my current investor, Ravi Arusumali of SEF. He did not invest in the business model called VAS, telecom, content, media, whatever else it was going on. He was like, we will do this, and we will continue to go wherever the journey takes. So when you have money in the bank, the first thing is to have your people, investors, be in sync that, gentlemen, or ladies and gentlemen, hopefully that way, that this is the story of our current situation, and I'm taking a bit. I think these are very brave people. I would prefer, and I would love that companies build that business line item, whatever it optimizes, they put it there, and then build the next business line item. While there is a justification to cut that business also, and that's the best way to go forward is, and there is no doubt about it, that if you have money, this is time for experimentation. The Paytm was one of the experimentation, actually.
But there seems to be again, if you go back to the previous panel, there seems to be this notion that you have money and raising money has become hard. So focus on unit metrics and do kind of things that are improving your current business. Is there some tension there where people are saying, well, if I continue to do this, this space is not really growing as fast as I thought, I should pivot?
Okay, so I raised money in 2011, and that time I was having Paytm business as one of the line item business, and some sincere investor told me, this is bubble, it's going to burst. Some companies in commerce are getting $50 million checks for no business they have. How sizable bubble was on that day? It must have been a bubble which is hopefully going to go bigger even now and forward. So my understanding is everybody knows future. I have never seen people who do not know future, except that they are so massively, royally wrong-timed that they start talking about Flipkart is going to die in 2010, and they keep saying it tens of years, and the day they'll die, they say, I told you 10 years back. That's a dumb theory, I can say. And similarly, oh gosh, these unicorns are dumb because they're unicorns. What will happen to them is nobody knows. Oh, gosh, this is not about cheerleading versus rational conversation. It is also about that I think the the guy who's running a business is like piloting a plane. You have fuel in the back, and there is an optimum fuel. You have to maintain a height, which means you have to continue to burn fuel to sustain there. And then you have to land at a correct justified location, and you don't want to land in Iraq or Iran where the bomb is happening, correct? Now think about this guy. No, this plane is going to come down, I'm telling you. Okay, I got it. Thank you so much. Can you help me that should I land on the next airport or the previous airport, and this is the maximum distance we should go, or should we land now? So the compass available and the decision matrix available to the founder is not so easy as it is talked about, that it is, I'll not be able to raise money. Giving you an example right now, we should be in the same list of people who, quote unquote, cannot raise money, if you will, because we are the part of the same tribe which was raising high price money, and probably not. But surprisingly, I said no to 4 investors last 3 weeks back. And in the last 3 weeks, this is the board meeting that is coming, and 2 of them have said that you will talk to the board that there is an investment coming. Now, this is the news to the board because I'm going to talk, there is no board news there, that we have opportunity of people who are wanting to put money. Now, I think whether it is because that we are a leader in the space and there is a space in leader 1, leader 2, or team leaderboarding, or whether this is a business model that we built incredibly well, or we are optimally priced, whichever the justification, market has money. Yes, there is no doubt. Ati sarvatra varjate, Sanskrit said it. Maximization of your valuation too early is bad, and justifying that everything is going the doomsday is totally bad. And saying, like you said it, that there is a sentiment to it and there is a reality to it. Right now, there is no doubt about it. If you can raise money, we want to spend more money than last year and this year. That's a statement which is, I was in January in Hangzhou, Jack Ma saw my cash reserves and saw our numbers, and he said, the only advice I can do is grow more. And that just is a counterintuitive in this environment. But because the way we grew and the way we were able to build unit economic of that growth allowed us to have enough cash in the bank already. It's interesting that way. So there's no doubt. I mean, it doesn't matter that there is just because it is April of 2016, there is a bad weather. It is always a business. Like News Corp, you would run a business just like the same way these startups are supposed to run. If India Star doesn't make money, you'll say, guys, get your act together, either find out a new revenue model or cut the cost. That's exactly what everybody has to do.
There seems to be a fear of down rounds, right? Meaning that on paper we were valued at X, and now people are willing to give us money, but they want us to kind of value that X minus something. At one level, it seems like it's not a bad thing if you're getting money, whatever the valuation is. At the end of the day, there's a paper valuation, right? What is your view on something like that? Would you push back pretty hard on a down round? Obviously, if people are willing to give you money at current valuation, that's great. But if that's the only alternative, it seems like it's not a bad thing to have a down.
I think the answer is in a context. For Malaya, getting a down round is not bad. For Ambani, it is really bad.
Okay. What about like the typical startups that have been built up in media and elsewhere as this kind of unique?
I think if we give too much attention to what world will say, then you are in a wrong business, wrong region. I think we have to, first thing of being an entrepreneur is having a thick skin. Even if you're doing a sincere job, then also you're going to be punished. Even if you are doing things correctly, people will look you, oh, it is my role to review you, so you have to allow me to judge you like that in third-party point of view. That's fine, please do it. So having a thick skin, what people will say, is a necessary, and not doing a round because what people will say is totally dumb. Like we just heard it very correctly. If you have money, I mean, dying versus living, if you really think you're done with this company, please let it die. And that is exactly what people will do. So down round is not bad if you are looking to believe that there is a business model that will continue. I'm not going to take the name, but for some commerce companies, this down round is not going to help because inevitably the battle is getting at a different scale. Right. This down round will be a starter of continuous and additional money requirement. If you in a new landscape believe that this new money can help you, please do the round and please change your course correction. If it is not, then don't even bother this round. This is the time to make money, get out. That's kind of stuff.
So either personally or as an observer of this space, what are 2 or 3 sectors in India that still continue to kind of give you hope that they will continue to do well if existing companies or not, or new companies?
Linearly, India, you can expect 200, 300 million connected people. Although this number has been talked a lot, but effectively connected is what I mean, which means they have open internet and decent enough device and decent enough bandwidth. So
effectively connected and be willing to pay for something is 2 different things, though.
I don't think you need to bother about pay. I used to run a content service business, and I knew if you have a way and method to charge 1 rupee, people are paying. So that's the wrong myth about India is that people do not want to pay, and second myth is that people love cash. These are 2 open stated dumb myths, which are just no logic. Connected people, what business they will do, like commerce is a very open one, messaging is a very open one. And then obviously financial services is massively for this country. Continue to find out the line items that this country's connected ecosystem will build and need. There is a business. If there is a massive amount of business for connectivity and access already in this business. That is exactly what telcos are getting forward multiple for. If you have a MASH independent technology to build connection, please do it now. I remember in 1998, I started an ISP called Chemistry Online. And that was too early time. Again, the timing problem. But today is the correct time.
Are there things where you feel like it's still too early in India? Businesses that are being set up? Any business that expects that 3 years will be optimization is too early. 5 years to 7 years it is. Even for any, and especially because we are talking about things that are not there or there. So for example, like food delivery that we talked about. Will India have food delivery or not? Answer is it will. You get your act together, sustain yourself, sail through, you're winners. That sort of thing. Yesterday I happened to run into somebody two smart guys who wanted to do a food delivery. It's a relatively new business. And they're saying that nobody wants to even talk to them because the whole sector is under kind of a bit of... Yeah. What advice would you have to somebody in certain spaces? For example, digital education in India has never really scaled, but there are lots of good ideas. Yeah. So how do you, what would you tell them? Here is how you go about convincing people you have something. Interesting that digital education, food delivery, are we deciding the current players are the winners? Nobody did a commerce investment from 2002 to 2008 probably. And Subrato of Excel giving that $2 million check to Flipkart and my board giving $1 million to me, which is not a public money, so it doesn't get a detail, are the really interesting moments when nobody wanted to give them check, but the conviction that I want to do this got them check. You want to do food delivery? Prove this with your passion, emotion, and action that you really mean it. I don't think that you would not give money as News Corp itself. But the point is, when you are flimsy in your commitment to the business that you're talking about,
Sometimes people, as you know, and this is an interesting one, people say, I'll look at you after 3 months to see that this guy is really serious about it or not. Because those who are serious and really believing that this is the business they will do, they'll find a way to business to do. I mean, it absolutely doesn't matter that you don't get money from institutions. I raised money in 2007. I don't think that I can talk about a company that was early capitalized. So I fundamentally do not believe that to start a business, you need early money. That's a antithesis of starting a business in my mind, because somewhere there is a glorification of startup and early stage money, and now people have a continuous series A and part 1, part 2, part 3 and pre-series A and pre-seed. So there is a glory associated which is transient in a sense, which is not to be aimed for. If you're really serious about business, please build a business. I don't think a restaurant nearby you needs a business money from someone. You can take a debt. I actually took a debt. I had an 8 lakh rupee debt, which was 24 rate of interest, and that was really massive cost on my business system. So I think people who are serious about building business will build business agnostic of an angel or a devil gives them money or not.
So we're kind of out of time, which means I'll sneak in 2 questions. Tell us about one startup that we haven't particularly heard about, but that you think is going to be something we'll hear about in the next year or 2.
I remember last it was Precto. Second it is Cleartrax.
Yeah, but we've heard of them.
Oh, you heard Cleartrax?
Something, talk about something that people here go, oh, I didn't know about them. Anything?
I think it'll be in logistics space. It'll be in logistics space. Newer players.
Okay. And then finally, I can't end this without kind of pushing you buttons a little bit on free basics.
Yeah.
You pushed back pretty hard, and rightfully so perhaps, on the Facebook idea. And then all the activism looks like it stopped that. And then everybody went away, right? Nobody's holding the government accountable for what next. You know, how are you going to actually improve connectivity in this country? How is India going to get better connectivity if you say no to Facebook? Fair enough. And then what?
First of all, I think we had a conversation with TRAI post Free Basic 2. So hopefully TRAI brings something forward so that people who are really looking forward to do something like giving benefit back to the consumer of his cost can do this comfortably as they wish to, if it is open internet, complete internet. And connecting internet is an obligation waiting for, remember somebody magical called, I don't know how many years we've been waiting, 29 December of so many years have passed. So hopefully that guy will do it, because it is not a government obligation to do it. Mm-hmm. Current private operators are a cartel. They have no interest on giving connectivity. And somebody has to take a leap of faith that I will bring connectivity to this country. And small startups, large global conglomerates, Google, Facebook, are doing their own bit. We are doing our own bit. We just connected metro stations in the city. We look to launch a P2P internet a few days later, man. I mean, hopefully that'll be really magical in this country. So if you have internet, you can give Wi-Fi to everyone, that sort of thing. So hopefully some of those things will come up.
Let's live in hope.
I got a question to you, considering you're the guy globally. 2 minutes. You come from New York, you travel world. What's this about India? Why News Corp and you have attention to India?
I think India for us is a long-term bet. We see a lot of Indians living a lot more of their lives digitally. And there are always bumps now, connectivity and all of that. But over a 10, 20, 30-year horizon, we literally see hundreds of millions of people doing most of the things online. And one of the bets we have made in India is around digital real estate. We own a big stake in PropTiger. It's the worst time to be in digital real estate in India. Right? I've been in it for 3 years. Nothing is moving. But when I got in, we had the opportunity to perhaps think of common floor, housing, India Homes. None of them kind of exist. Right? So we feel like we've made the right bet, but the bet for us is, like you said, it's on Dhruv, who's the CEO and founder. We think that they have the right temperament. The market is not great, but they're doing things the way that we think over 10 years, Indian real estate will be largely digital, and when it happens, we want to be part of it.
India, as a media, still grows in print. There is a ton of money print makes. Full-page ads go to print. Even e-commerce took money and gave to print. Digital media doesn't make a lot of money. Revenue models are challenging. What's your understanding of when media will take a turn towards digital side in this country, and obviously smartphone is growing is truth, but still revenue, when will revenue come from digital?
I think it's a bit of a myth that Indian print business is doing well. I think most Indian media companies which are part of large conglomerates, so the accounting is a bit like Enron accounting, so you really don't know which business is doing well. But the problem that we have in the West is exactly the problem here. I don't know of any 20 to 30-year-olds who read print in India already. Right? So the pipeline is empty. So no matter when it hits, it's going to hit. Right? The question is, will people pay for content digitally? But to me, with media, I think if people are consuming it on a particular platform, how to make money is the problem of media companies. It's not a problem of consumer behavior. And I think that's easier one to sort out. If nobody is consuming you, it's a different problem. But people are consuming content digitally so much that you will figure it out.
Did you want to buy Twitter as was the News Corp?
No, it doesn't make sense, right? Because Twitter is it's a platform that everybody needs to use. And the moment it is part of one media company, a lot of other media companies wouldn't want to use it, so it doesn't make any sense.
Okay, this is a global news, actually.
No, it's
the final one. We see Twitter, Flipboard, Jite, everything coming out of the West, and there is News in Short and incredible other apps that come out of this country, and they are very popular and they're useful. Why don't these companies get attention, bandwidth, and everything else like the Western companies? And is there a hope that you think India will produce real new content consumption interface?
I think there's some interesting experiments going on, but if you talk to somebody like Scoopwhoop, right, they'll say we are India's better BuzzFeed. It's the same principle, right? That's not a model then that travels very well. You have to be better or something unique as well at the same time. Right. So I think that's the issue. The scale in India is very deceptive. You go from, you say you have 20 million people consuming your content and you think that's great, but the reality is that the digital media landscape is one of declining returns, right? Volume doesn't give you more money digitally. So that's, I think, the challenge. We have to stop, otherwise they'll kick me out.
This is true as the last one on Facebook. Rupert Murdoch said, Google is stealing my content when they did news.google. Now Facebook is putting instant access articles. Is it stealing content officially, voluntarily?
No, I think most people who are putting content on Facebook are putting it because they want to, right? There's no obligation to do it. I think part of the issue with Google is that the search monopoly gives them significant clout. And it's not just us. Getty Images, which is one of the biggest kind of photo, they just filed a thing with the EU where they said when you change the Google Images formats to bigger pictures, people stopped coming to Getty. They just looked at the pictures on Google and stopped, right? So you're destroying somebody's business model. I think that's the issue with Google. With Facebook, our belief is that my model shouldn't work for Facebook. Facebook should work for me. But they have 1.6 billion people. I can't argue about that.
All right, great, thank you.
Thanks, everyone. This turned out to be a different conversation.